Hi friends, my name is Krishna. Welcome back to my YouTube channel. Today's topic is going to be on ledger. We already discussed about journal entries chapter that has been completed now. I'm starting a new topic now, new chapter. So I request all of you to go through this video till the end. And if you like the content, please subscribe to my channel. Share this video with your friends and colleagues. This is going to be very useful for all people whoever is studying 11th, 12th, BCom, BBA, CA Foundation and MBA courses as well. Okay, so I request you to go through the video till the end and share this video with your friends and colleagues. So without wasting much time, let us get into the topic, right? Okay guys, let us start now. So I'm going to talk about what is ledger, what is the meaning of ledger, how the transactions are being posted into the ledger, and what should be the specimen of the ledger to be followed, and how do we do the balancing, and I'll also explain some of the illustrations. I'll take examples from institute material and I'll explain them. In today, what I'm going to explain is what is the meaning of ledger and how the specimen and what are the rules we need to follow. Okay, I'll try to cover as much as possible. Right. So before we get into the ledger, I wanted to ask, I wanted to explain about journal topic. Why it is important? Why we need to learn about journal before ledger is, journal book is our day book, right? What business does, day to day, whatever transactions they do, they keep purchasing goods, they keep selling goods, they keep incurring expenses, they keep making payments to the suppliers, they keep receiving amounts from the customers, and they will be depositing amounts in bank, they will be withdrawing amounts from the bank. Many transactions keep happening on daily basis. Am I right? Right. So all these transactions, what they do, as and when they incur, as and when the transactions are happening, what they do, they first come and record all those transactions in a book called journal book. So that is the reason why we call journal book as a day book or book of first entry. So that is the journal book where the first transaction will be recorded. First transaction will be recorded. How do we record those transactions in journal book? We record those transactions in journal book by means of a journal entry, right? We debit one account, we debit credit, and we one account, and we keep recording those transactions into the books of accounts, right? So as soon as the transaction is happened, we first enter those transactions into a journal book. Clear? So journal book is the base for us to record those transactions into ledger, right? What will happen? Why I need to record them into the ledger book? Why I need to? I already maintained a journal book, right? Why do I maintain a ledger separately? Journal is enough, no? Why should I maintain another book called ledger? Is it really required? It is required. Why it is required? I'll first explain. Then I'll talk about the ledger. Okay. So, for example, in a day they might have purchased 10 times. They would have sold goods 10 times. They would have spent 30 expenses. They would have made payment for 15 times. So there could be hundreds of transactions happening with different people. There could be hundreds of transactions happening with different people. Now, in a day, for example, I purchased goods 10 times. Next day again 15 times. Next day again 20 times. We keep purchasing like this, right? Suppose maybe by end of the month, if businessman would like to see how many goods he purchased, how does he get to know? I'm just taking one simple example. I purchased goods every day 10 times, 20 times, 30 times, 40 times, 5 times, 2 times. Every day I'm purchasing goods. Right? I'm taking only purchases as an example now. Several times I purchased during the month. Right? Now, my question is, when I purchase it for so many times in a month, how do I know the total purchases I made? You can say, yeah, you go through the journal book, you go through, the journal, journal entries posted for purchases and keep, totaling, then you will get to know the journals. Yes, that is possible. But how difficult it is. At a glance, I will not get the data. At a glance, if I go to journal book, will I get to see all these purchases at one place? No, it got scattered in different pages. First page I might have 4 transactions, next page I might have 10 transactions, third page I might have 20 times. So there could be different pages I would have posted those entries. So if I want to know one particular activity or one particular account related information, I will not get that at a glance by going through the journal. Purchases, how many purchases I made during the month? I will not get straight away answer in journals. How many sales I made? I don't get. How much amount I paid as a salaries? How much amount I paid as a repairs and maintenance? How many assets I purchased? I will have the information journal, but at a glance I will not get that information. I just wanted to see how much. So for that, what you are supposed to do is, whatever transactions you are, journal entries you are posting in journal book, they have to be segregated into different accounts. Whatever journal entries you are posting in journal book, they have to be segregated into different accounts. What are those different accounts? We already discussed. What are those accounts? One is personal account, real account, nominal account. So we need to segregate whatever entries you posted into journal book into these three categories. What, Krishna? What do you mean to say? I'll just open one personal account, one real account, and one nominal account. That is enough? No. You need to identify how many personal accounts are there in journal book. How many real accounts are there in journal book? How many nominal accounts are there in journal book? For each personal account, you have to have a separate account. For each real account, you should have a separate account. For each nominal account, you have to have a separate account. So you need to maintain individual accounts. For example, first page I have one purchase. Second page I have 5 times purchases. Third page I have 15 times purchase. Do I need to maintain 21 times of purchase account? No. One purchase account you need to maintain. If I have 50 sales transactions, you need to maintain one sales account. I have repairs and maintenance nominal account. Hundreds of transactions are there in repairs and maintenance. You can maintain one repairs and maintenance account. You have advertisement expenditure. You have different advertisement expenses you paid. You can have one advertisement account. So for each account, you have to maintain one account. Hey, what is this, Krishna? You are talking about account. What do you mean by account? This is also I already explained. Once again, I am explaining. What is an account? Account is a classified statement. Account is a classified statement which is in the form of English letter T. See, this is a classified statement which is in the form of English letter T, capital letter T, and which has two sides. This is one side, this is another side. This has two sides. Left hand side is called debit side, right hand side is called credit side. Right? This is a classified statement which is in the form of English letter T and divided into two parts. Left hand side is called debit side, right hand side is called credit side. Clear so far? Now, after preparing this classified statement, what is that we are going to get out of this? Out of this classified statement, what we are going to get is, we are going to get the final balance of that particular account. For example, if I take purchases, all purchases will be recorded in this T form. What from journal? From journal book, all purchase related transactions will be recorded here. Similar way, if this is sales account, whatever sales related transactions posted in journal book have to be posted here in journal sales book or sales account. So what will happen at the end of the day or end of the month or end of quarter, end of half year, end of a year, if you go through this account, you will get to know how many purchases you made. If you total this, you know what is the total purchase you made. If you go through this account, if in case if this is sales account, if you go through this, you will get to know how many sales you made. Clear? So account is a classified statement which has two sides, left hand side and right hand side. Left hand side is called as debit side, right hand side is called as credit side. And this account gives us the final balance of that particular account. If it is a real account, it will give the final balance of real account. If it is a personal account, it will give the final balance of personal account. If it is a nominal account, it will give the final balance of that nominal account. That is what this classified statement gives. This classified statement is nothing but an account. This classified statement is nothing but an account. So these accounts are being maintained in this ledger book. These classified statements, these accounts are being maintained in ledger book. So now you see the book which contains all set of accounts. What are those set of accounts? It can be a personal account, it can be a real account, it can be a nominal account, or all the three together. So you need to maintain these accounts, classified statements of personal account, real account, and nominal accounts in this book. That is the reason why this ledger is called as principal book of account. This ledger is called principal book of account. Why principal book of account? This is the main book where you get to see the final balance of each account. If you want to know purchases, yes, you go to purchase account, you get to see what is the total purchase you made. If you want to know the sales account, go to sales account and see you get to see what are the sales made during the month or during the day or during the week. Similar way, if you want to see how many salaries, how much salary you paid, you get to go to salaries account, you get to see the total salaries paid during the month. So any account you take, Krishna account, if you want to go and see how many goods we purchased from Krishna, how much we paid to Krishna, how much I am yet to pay to Krishna. So you get to see in this Krishna account. So for each person or each real account or each nominal account, I am maintaining a separate account. That account is nothing but a classified statement which gives me the final balance of that particular account. Which gives me the final balance of that particular account. That's all. So ledger book contains all set of accounts. All set of accounts. What are those set of accounts? Personal accounts. It can be a natural person, it can be an artificial person, it can be a representative person. All those personal accounts will be there in this ledger. All real account related accounts will be there in this ledger. Assets, right? All assets, goods related accounts will be there in this ledger. All nominal accounts related accounts will be there in this ledger. All expenses, incomes, gains and losses, all those accounts will be there in this ledger. So why this ledger is maintained? This ledger book is maintained to have different accounts. Those accounts will give the ending balance or final balance of that particular account. So it will be very easy for you to know how those transactions are being trending, how much amount is being posted, how much amount I spent or how much amount I recovered. Everything you will get to know by going through the ledger. Clear? So that is the reason why the definition says the book which contains all set of accounts, personal, real, nominal account, is known as ledger. This is known as a principal book of account. This is known as a principal book of account. The reason why I am saying principal book of account, this principal book of account will give the final balance of each account. So this is the main book for us, right? Right. Now, as I said previously, this account is a classified statement which is in the form of T. See here, this is the center line. This is in the form of English letter T. And this has two sides, debit side and credit side. See the specimen. How this account is going to look like. See, this is debit side, this is credit side, this is divided into two parts, this is left side, this is right side. Left side, what and all we are recording? We are recording date in which this transaction is recorded in journal. So this is the date and this is the transaction particulars and this is the JF. JF is nothing but journal folio number, because if let us say this is a purchase account. First transaction is recorded on 1st January 23, right? So when I record this transaction here, this transaction would have come from where? From journal, correct? This transaction would have come from journal. So from which page of the journal this transaction has come? That page number you need to put here. Which page of the journal book it has been posted here? That number, page number you have to put, and amount you need to put here, right? This is debit side. Similar way in credit side also, date, and you need to put particulars, and whatever transaction you are posting here, the journal folio number also you need to bring in here. If it is a credit transaction, if it is a debit transaction, that come here. If it is a credit transaction, that will come this side, and amount also you need to put. This is how the specimen looks like: date, particulars, journal folio number, and amount. Similar way in credit side, date, particular, journal folio, and amount. So this is in the form of English letter T, and debit side and credit side. Clear? Are you clear about the specimen? Right. Now, what did I say previously? Whatever transactions are posted in journal book or recorded in journal book have to be transferred to this account. Whatever transactions we recorded here have to be transferred to this account. The transfer of transactions from journal book to the ledger book is called posting. What do you mean by posting? Transferring of transactions posted in journal book to the ledger is called posting. What do you mean by posting? Somebody can ask you. Whatever transactions we recorded in journal book have to be transferred to ledger book. The transfer process is called posting. Clear? This is the meaning of posting. Now, what are the rules to post? Debit side, when you are posting, how to post that I will explain later. But when you are posting these transactions in debit side, we generally use the word called to. Is there any meaning for that? No meaning. But that is how this has been defined in accountancy. When I am debiting this, when I am posting some of the transactions in debit side, what do? I use to. When I am posting any transaction in credit side, this is credit side, right? I use by. So please remember this. Whenever I am posting any transactions, I have to use to if I am posting in debit side. I have to use by if I am posting in credit side. How to post here, what to write, that and all I am going to explain. But time being, what you need to understand is, if I am posting something in debit side, I have to use a word called to. If I am posting something in credit side, I have to use a word called by. Is there any meaning? There is no meaning. So these two things have to be remembered. And as I said previously, for each transaction, each account you post or you record in journal book has to be created with one account. Suppose if Krishna has 100 transactions, Krishna account you have to maintain. If Ramu has 200 transactions, Ramu has to have one account. If purchases have 1,000 transactions, purchases you have to maintain one account. If sales have 5,000 transactions, sales you have to account. For each type of account, you have to maintain one account in your ledger book. Krishna account, Ramu account, purchase account, sales account, bank account, cash account, goods account. So for each and every transaction, you need to maintain one account. Goods, you don't require to goods 1, goods 2, goods 3, different accounts. No, goods one account. Purchases, you don't require to maintain purchase 1, purchase 2, purchase 3. Purchases one account. Sales 1, sales 2, sales 3, you don't need to maintain. Sales is one account. Krishna account, Krishna 2, Krishna 3, Krishna 4 not required. Krishna is one account. Unless you have different Krishna accounts you need to maintain, then you need to put A Krishna, B Krishna, C Krishna. You need to maintain accounts like that. Are you getting my point? So for each account you need to maintain a separate account in the ledger book. That is what I am trying to say. This is one rule. And second rule is, whenever you are posting a transaction in debit side, you have to use a word called to. Whenever you are posting something in credit side, you have to use a word called by. Is there any meaning? There is no meaning. Clear? This is about the basics of ledger. What do you mean by ledger? We understood. Why we need to post those transactions from journal to ledger, that also I explained. What do you mean by account? I explained. What is the specimen of the account? I explained. What is the meaning of posting? I explained. What are the rules to be followed while posting transactions from journal to ledger? Also I explained. Right? These are the topics I have decided to cover today. And next video, I'm going to talk about what is the meaning of balancing, how the balancing has to be done, how the transactions have to be posted, into ledger book. Those rules also I will explain in my next video. Hope you are clear, right? Right. So if you like this content, I request you to like this video, subscribe to my channel, and share this video with your friends and colleagues. Right? Thank you so much.